It's time to put the spotlight on mutual funds. As always, it's time for the MF Corner on the show this afternoon. Now, a defensive sector like Pharma always helps in times of volatility, but does that build a case for Pharma funds? Let's find out from Dhirendra Kumar, CEO at Value Research. Hi, Dhirendra. Good to have you with us on the show. Today, we're going to put the spotlight on Pharma funds, which have always given a huge outperformance over the Sensex in the long and the short term. Why is that?
A non-cyclical, and the struggle of the market and Pharma has escaped that substantially over the past 5 years. But one thing which most people will be actually missing right now, that through the boom period of 2004 to 2007, Pharma was a completely ignored sector. It was not a growth story. So it looks very attractive, and it has been able to hold the ground. Simply because all other part of the market is, investors have been so disappointed and have not been rewarding. So one should not lose that perspective. FMCG and Pharma over the past 5 years have done well, and now we are witnessing some kind of performance chasing, investors lapping onto it, or asking more questions about, or getting curious, or getting interested in Pharma fund, which may not be the wisest thing.
Dhirendra, Magnum Pharma has been a laggard in the category over the last 7 and 5 year period. However, if we look at the last 1 and 3 years, it has been the best performing fund. What's changed for this one?
There has been some change across the equity fund of SBI, that they have got their momentum back. They clearly seem more proactive, and they also, looks like empowered or taking bigger bets. And but this fund shows all the symptoms. It is a very high quality fund. It has got its momentum back, like all other funds. And I think overweight on some of its overweight positions doing wonders for this fund on a relative basis compared to other funds.
Dhirendra, we've also got a few viewer queries. The first one is from Pramod Kumar. He'll get 4 lakh rupees interest-free loan that he wants to invest for his daughter's education. He'll need this money 2 years from now. So he wants to know, where should he invest this money?
Ideally, one should never borrow to invest, but because he is getting an interest-free loan, so it is effectively money for free. So he should be extremely conservative with this. He should only consider a bank deposit or a short-term bond fund, and completely ignore the gold or equity, which he will be tempted to. But it will be because this is a non-negotiable goal, and he needs the money at a predictable time frame 2 years from now, and for a very important goal. So he should not take chances with his money and earn as much as he can in a risk-free way.
The second query is coming in from P. Vijay, and he says, please suggest a good ELSS fund apart from HDFC Tax Saver. He can invest about 2,000 rupees per month for a time horizon of 5 years, and he asks whether he can consider Axis Long-Term Equity, ICICI Pru Tax Gain, Canara Robeco, or Franklin India Tax Shield Fund.
I would say that if I have to choose 2 funds, and of course, if and looking superior return, I would choose Axis Long-Term Equity Fund or ICICI Prudential Tax Plan.